Peace and welcome. We're going to have another day of that daily news with Delta Crypto. Thank you all for tuning in. We're going to go ahead and get started reading out the market cap. That is, well, let's refresh it, make sure we got an updated market cap. Oh, there we go. That is 2.022 trillion in the market today. BTC dominance is 40%. And where's Ethereum's dominance? But the GUI is down. That's great. 87 GUI. Where I don't see Ethereum dominance right now, but we'll check that out later. Anywho, let's go ahead and get into these prices. See, because the market is up today, at least it appeared to be. All right, Bitcoin priced at $42,817.96, up 0.96% in 24 hours. Ethereum at $3,217.90, up 2% today. Tether is still $1. BNB $472.61 is up 0.5%. Today, Cardano, $140.41, excuse me, and it's up 2.25%. We're down 2.25%. It's still up higher from this week. We're still looking at 7.58 for the 7 days, but today is struggling a little bit. It's all good. Still get it back. USDC is still $1. Solana, $141.60. It's up 2.3% today. XRP is 75 cents, still tethering in the same little area, but it says it's up 1.47% today. Terra, also Luna, $84.52. It's up 4%, 4.59% today. Polkadot, $25.19. It's up 1.8% today. Dogecoin still hovering around this same price range of 16 cents. It's up 0.81% today. Avalanche, a token that we're going to go over, is $87.23. It's up 2.21% today. I think that ends the list, but I'm just curious. There we go. Coming in at number 17, a coin that we're about to go over in just a little bit, is $40.73. It's up 7.66% today. That is Atom. So what we want to talk about today is those A's, right? Cosmos, aka Atom, along with Avalanche, aka AVAX. Are these two going to be considered Ethereum killers as well? I mean, they are networks. They are working similar. They are accomplishing a lot. Let's see what they have going for them. We're going to start today off with Avalanche. Fresh Snow, a deep dive in the Avalanche network. All right, that's just a little introduction to the author, but we're going to go ahead and get started right here. And y'all can read it all if you want to, because we will be leaving this in the description. So recently, I've been looking at different blockchains and trying to figure out what draws people to them. I've explained why people find Bitcoin so compelling, some of the trials and tribulations I experienced when I first began experimenting on Ethereum, and of course, some of the ways DeFi, beginners, and power users alike can take advantage of the Polygon network. But there is one chain I'm hearing a lot about lately. It's one of the fastest growing DeFi ecosystems and one that I'm particularly curious about. I'm talking, of course, about Avalanche. According to its proponents, Avalanche is supposedly ultra fast, relatively cheap, and most secure of all blockchains. Now, I've done some reading as well as some experiment of my own. And in this article, I'm going to try to separate the hype from the reality, as well as find out just how to get started with some DeFi on Avalanche networks. Regarding the last part, the post is brought to you through generous support of Pool Together's Pool Grants program, and I'll be including a video all about how to use Pool Together V4 on Avalanche. Pool Together is a crypto prize-linked saving account, which means that as you save, your interest is pulled together with the interest of other depositors to make prizes that anyone can win. It's a bit like a lottery, except you never lose your deposit. And with low-cost chains like Polygon and Avalanche available, you won't have to worry about losing money on exorbitant gas fees. So check the video out to learn more. I'm curious. Let's watch it.
Welcome to Thumbs Up Finance and to another DeFi video. Today, we're going to be talking about Avalanche Network. This is an alternative L1 blockchain that's gaining in popularity by offering fast and relatively low-cost transactions while maintaining a good degree of security and decentralization. I've written an article all about Avalanche, and I'll link that below. But in this video, I want to share some exciting news. Pool Together, the crypto prize-linked savings, is now available on Avalanche. And just like I showed you how to go from fiat to Polygon to Pool Together, I'm going to show you all the steps to do the same on Avalanche. And by the way, you can use the video chapters to skip ahead or go back at any time. So let's get started. I'm here on Newton. This is a Canadian exchange that offers a variety of cryptocurrencies, including Avalanche. I'll put a link below for a $25 sign-up bonus for new users. But you can also use Coinbase or any other exchange that offers AVAX. I've got around $130 Canadian, which should be around $100 USD. I'll click Trade and search for Avalanche AVAX, and I'm going to click the max amount and Review Trade. That's good. So I'll click Buy AVAX. Success. So now we've got our AVAX on exchange, but we need to get it into our MetaMask or other wallet. So here's a trick to do that quickly and easily. Head over to sushi.com and click Enter App. Then click here to select the network and click Avalanche. It's going to pop open our MetaMask and ask to allow the site to add the network. Since I've already done that, it's going to go to the next screen, which says allow this site to switch the network. And I'm going to click here to confirm that. Once that's done, we'll go back over to our exchange and click Withdraw, Crypto to Wallet, and do the maximum amount. And now to get our wallet address, click on MetaMask and click Copy to Clipboard. Come down here and click Paste Address, and now we can review the withdrawal. One nice thing about Newton is that they're going to cover the network fees. So go ahead and click Withdraw AVAX.
Oh, wow.
Success. Your transfer is underway. After a few moments, we can check our MetaMask. And there we go. It's arrived. So we'll go back to SushiSwap. We're going to swap AVAX for USDC. Now, I don't want to swap the maximum because we need some AVAX to pay transaction fees. So I'm going to try, I'm going to go down here and I'm going to type 100 USDC. And I'll click Swap. Confirm swap. By the way, you're going to have to sign an additional transaction here to allow SushiSwap to access your AVAX. Since I've already done that, I'm just going to go ahead and click Confirm to finalize the swap. Then we'll click Add USDC to MetaMask, Add Token, and now if we look in our MetaMask, we should see the USDC there. I want to quickly mention an alternative to buying AVAX on exchange. If you want, you can use the Avalanche bridge to move your assets from Ethereum over to Avalanche. After connecting our MetaMask, we want to check which network we're on. Here I'm on Avalanche, so I'll click Switch to switch to Ethereum. Then we can choose an asset, for example USDC. You can use any asset you want, just don't pick Ethereum because you'll have to wrap it and pay an extra fee. Now, one cool thing about this is if you send more than $75 of any token, you'll receive a small airdrop of AVAX to help you cover initial gas fees. However, a friend of mine did this, and it was not even worth the cost of the gas. So this is not a method I would personally use, but that's up to you. So we've got our USDC in our wallet, and we're here on v4.pooltogether.com. First thing we need to do is make sure we're on the Avalanche network, and if you're not, you can click here and choose Avalanche from the list of options. Then we're going to go to Deposit On and click Avalanche. Now we can see that we've got around 100 USDC-E. I'm going to click on the number to add the max amount. You can also type any amount you want. Down here we can see the estimated costs in USD. We'll click Review Deposit. We have to do an approval to allow Pool Together to access our USDC. It says it should cost around 10 cents. So we'll click Confirm Approval. And it says it's going to cost around 13 cents Canadian. So the estimate was pretty accurate. The approval's done, so we'll click Confirm Deposit. And this one should be more expensive. Yeah, it's going to cost around 0.018 AVAX, which, to be clear, is actually around $2 Canadian. So this is definitely not as cheap as Polygon, but it's still a lot less expensive than Ethereum. Now that our transaction is complete, we click Account. Down here, we can see that on Avalanche, I've got $100.20 deposited. And on Polygon, I've got around $752 that I've been adding to since I made the video. And if you click here, you can see that I've won multiple times. $10, $10, $5, $5, $6, $1. In just a few months, I've earned $39, which is around 20 to 30% APR. That makes this just about the best savings account you could have. And I know I'm going to be adding more and more to mine as time goes on. What do you think? Are you bullish on Avalanche? Read my blog post if you want to learn more about that. And let me know in the comments what you think of Cool Together and what other DeFi videos you'd like to see. And until next time, thumbs up.
Appreciate you, brother, for that read over that video. I'm definitely going to look into a little bit deeper, and I can even make sure I get y'all a copy of that. Well, y'all gonna see it because we're gonna get y'all a copy of this Publish Your X, so you'll be able to go and watch that video and look a little bit deeper and start using that swap. And without further ado, let's hit the slopes. What is Avalanche? Those familiar with Ethereum, Bitcoin, and the core concepts of blockchain technology will likely have heard of the blockchain trilemma. This idea proposes that a blockchain needs to offer three elements to be successful: security, decentralization, and scalability. But in doing any too well, the third is inevitably sacrificed. So, for example, Bitcoin is seen by many to achieve a high level of security and decentralization, yet its small block size and long confirmation time limits its scalability. As I mentioned in my post about Bitcoin, there are solutions being worked on to bring greater functionality and scalability to Bitcoin, from layer 2 solutions like the Lightning Network to wrapping Bitcoin for use on other blockchains. Still, some feel that Bitcoin's design itself is flawed, that the lack of smart contracts is too big of a limiting factor, and the proof of work system doesn't offer sufficient decentralization under scrutiny. Ethereum too suffers critics for failing to scale to meet its immense popularity. As a smart contract platform offering near endless programmability, Ethereum still manages to achieve a high level of security and decentralization. But even as progress is being made to scale via layer 2 solutions, many new and experienced users alike feel limited by the high cost in doing transactions on the network. Cost is, after all, another impediment to scalability. How is Avalanche different? We have an in-house joke that there is no blockchain trilemma. Kevin Sequick, COO of Avalanche Wired. In order to understand what makes Avalanche different, we first need to understand its key point of differentiation, its consensus mechanism. Coming to consensus, you've likely heard the terms proof of work and proof of stake. I hope so, since they're already used in this article. And you may have even heard them referred to as consensus mechanisms. But this is actually a misnomer. In fact, these are what's known as Sybil resistance mechanism, and they are only half of the true consensus mechanism employed by a given blockchain. Sybil resistance measures how a protocol fares against a Sybil attack. Sybil attacks are when one user or group pretends to be many users. Resistance to this type of attack is essential for a decentralized blockchain and enable miners and validators to be rewarded equally based on the resources put in. Proof of work and proof of stake protect against this by making users expend a lot of energy or put a lot of collateral. These protections are an economic deterrent to Sybil attacks. So, Ethereum.org. On the other half of this consensus couplet is what's called the chain selection rule. A chain selection rule is used to decide which chain is the correct chain. Ethereum and Bitcoin currently use the longest chain rule, which means that whichever blockchain is the longest will be one of the rest of the nodes accept as a valid and work with. For proof of work chains, the longest chain is determined by the chain's total cumulative proof of work difficulty. The combination of proof of work and longest chain rule is known as Nakatomi consensus. Nakatomi consensus, named for Bitcoin's pseudo creator, is used by most proof of work blockchains, including the current version of Ethereum. However, alongside the shift of proof of stake, As a part of the Ethereum 2.0 roadmap, this will change to a new consensus mechanism known as Casper FFG that uses checkpoint verifications for chain selection. You can learn more on the Casper's white page. Novel consensus mechanism has been proposed and even implemented by other blockchains. Most use proof of stake for Sybil resistance, as that appears to be the most secure option. Cardano's or Boros protocol sits somewhere in the middle of these two with what is called the local longest chain rule. We have to see page 23 of the white paper. And that allows for chain selection without checkpoint, albeit with a longer time to finality. More on that later. Avalanche, right? That's the focus of this article, isn't it? Uses a family of consensus protocols, collectively referred as SNOW. Inspired by a gossip algorithm, this family gains its properties through a deliberately metastable mechanism. Specifically, the system operates by repeatedly sampling the network at random and steering correct nodes toward a common outcome. Similar to Nakanamo consensus, the SNOW protocol family provides a probabilistic safety guarantee using a tunable security perimeter that can render the possibilities of a consensus failure arbitrarily small. Wow, that was a lot. What does all that mean? Essentially, the protocol continues pose small, random groups of validators and combines their consensus, determined by a supermajority with the consensus of other groups. That is what's meant by gossip. As gossip spreads, confidence increases until the network consensus is finalized. Okay. One of the key benefits of these SNOW protocols are that they are not reliant on a specific Sybil resistant mechanism. Through the white paper proposes that they align best with proof of stake. Interestingly, Avalanche consensus, the combination of SNOW protocols plus proof of stake, allows claims to provide a greater safety threshold than Ethereum or Bitcoin's 51%. According to Avalanche website, this threshold is at 80%. Through the Avalanche white paper on page 2, notes that the system can uphold safety but not liveliness guarantees under these conditions. Let's talk about the speed. Consensus is important for security and decentralization, but what matters most is the untrained user is speed and cost. Ultimately, these are both functions of throughput, often measured in transactions per second or TPS. Throughput can mean different things to different people. For example, Visa can handle tens of thousands of transactions per second, but those transactions are not final. Each requires immense trust in Visa to make their daily, weekly, or even monthly settlements. In trustless systems, we often criticize blockchains that prioritize security because slow confirmations make them unusable in day-to-day life. No one wants to wait tens of minutes for layer 1 transactions on Ethereum or Bitcoin to finalize before they can leave the store. Of course, layer 2 solutions solve this, whether Bitcoin's Lightning Network or Ethereum's rollups or even plasma sidechains like Polygon. But abstraction and, worse still, fragmentation can discourage users. Indeed, the ideal amount of friction for most modern people is none at all, and thus the rise of layer 1 solutions. The history of blockchain tells us the most monolithic approach failed, and yet it's entirely plausible that they don't actually have to. While some such chains like EOS or Solana are likely more hype than reality. As we've seen already, Avalanche is doing something truly innovative. And the result, Avalanche can reach thousands of transactions per second with a high degree of decentralization and security. Furthermore, these transactions count can achieve on a per subnetwork basis. Subnetworks are similar to shard chains, as seen in the Ethereum 2.0 or Polkadot or Elrod, and several other networks. A few networks use to hold shards. So sharding is a process of partitioning various systems' resources in order to increase performance and reduce the load. There are various types of sharding mechanisms. In network sharding, the set of participants is divided into separate subnetworks as to reduce algorithmic load. In state sharding, participants agree on storing and maintaining only specific subparts of the entire global state. Lastly, in transaction sharding, participants agree to separate the processing of incoming transactions. In Avalanche Borealis, The first form of sharding exists through the subnetwork functionality. For example, one may launch a gold subnet and another real estate subnet. These two subnets can exist entirely in parallel. The subnet interact only when a user wishes to buy real estate contracts using their gold holdings, at which point Avalanche will enable an atomic swap between the two subnets. Wow, learning something while reading the y'all. Man, it looked like we might not even make it all the way into Atom, and Atom has a lot to do with this. That's why I paired these two together, but we'll definitely bring it up tomorrow if we don't get to it today. So, in essence, subnetworks, aka subnets, allow for the spreading of the network load such that only those who wish to be stakeholders in a given asset need participate by becoming validators. Each subnet can contain multiple blockchains or DAGs of its own, which can be either public or private. This could be useful for companies or governments to make use of blockchain technology without exposing customer or citizens' private data. That's big. There is only one subnet which every validator must validate, the default subnet, which contains Avalanche's three main chains: the exchange chain, the platform chain, the contract chain. The X chain, the DAG-based chain, serves two important functions. It is used for payments due to its relatively simple functionality. It does not allow for execution of smart contracts, and it is used for the creation of AVAX and other assets. Then we have a P chain. This chain handles data and metadata. More specifically, it allows for creation of subnets and blockchains and the addition of validators to subnets. Then we have the C chain. This is a chain you will be most familiar with as you begin using Avalanche. It is the EVM compatible smart contract blockchain. As such, it works with MetaMask and connects to Solidity dApps that have been ported to or built natively for Avalanche. If you have ever used Ethereum or any EVM blockchains such as Polygon, Terra, Harmony, Celo, or any rollups like Arbitron or Optimism, this will function in essentially the same way from UX perspective. In the video that accompanies this article, I show you how to add Avalanche, the C chain, to MetaMask, send AVAX from exchange to your wallet, and do a few basic smart contract interactions, swaps on a decentralized exchange, which was SushiSwap, and the deposition in a pool together, prize-like savings. Speaking of which, let's talk a bit about the token that powers this whole ecosystem, AVAX. Avalanche native token has a lot in common with Ethereum's Ether token, at least in the upcoming proof of stake system known as Ethereum 2.0, given, however, that outside of Kent's Suggy testnet users, none of you will have hands-on experience with that. I will instead draw comparison to a token which is available for use today, Luna. Like Luna does for the Terra blockchain, AVAX serves the following function on Avalanche: a unit of account used to pay transaction fees, secures the network by serving as collateral for staking. Similar to Luna and Ethereum, since the implementation of EIP 1559, AVAX is burned with each transaction. Oh, I love it, adding deflationary pressure. Unlike those examples where a base fee is burned and a premium is paid to validators and miners, all of AVAX from transaction fee is burned. And given that the total supply of AVAX is capped at 720 million, the constant reduction of supply is a net benefit to all network stakeholders, including those who are invested passively. Since they don't receive the transaction fees, stakers earn instead rewards paid out by token inflation. There are two interest features of these staking rewards. First, while Avalanche does not employ slashing to penalize bad actors, in part due to their confidence that their consensus mechanism sufficiently neutralize them, the rewards themselves are the incentive not to go against the network. Validators who maintain adequate network uptime, validate transactions, and maintain stake within the minimum and maximum allowed durations will receive compensation of up to 11% annually. Secondly, the staking rewards, issuance rates, as well as transaction fees and requirements for staking are all within certain pre-established boundaries, subject to vote by Avalanche holders. That's right, unlike Luna and Celo, it's not only the stakers who can vote. They only can create proposals. Though only they can create proposals, but they're not the only ones that can vote. AVAX is a highly inclusive platform which enables anyone to connect to its network and participate in validation and first-hand in governance. Any token holder can have a vote in selecting key financial parameters and in choosing how the system evolves. Okay, I like it. Now, in conclusion, dang, that took up our whole class today, but let's go ahead and wrap it on up. In conclusion, in Avalanche, we see a platform that tries to defeat the blockchain trilemma through innovative approaches that don't rely on centralization. Thus far, no other blockchain has succeeded at achieving this. The most promising contender, in my views, is Ethereum with its modular roadmap, but this is still but a work in progress. Avalanche 2 chooses modularity, but in a novel form. It claims to optimize for speed and security while still simultaneously achieving decentralization, but it does so through complex, interwoven mechanisms that most either pretend to understand or ignore completely. Merely scratching the surface in this article has required weeks of sifting through white papers, articles, and YouTube videos. This complexity, like so much in blockchain, can be a turn off to newcomers. Often it feels like smoke and mirrors, distractions that serve to cover overly centralized or ill-conceived designs. This skepticism is necessary, laudable even. So complacency would benefit no one long term. Complacency will benefit no one long term. Other chains making grand promises and frequently touted as Ethereum killers, from EOS to Solana, do not inspire much confidence under scrutiny. Yet, Avalanche stands out to me at least as one to watch. I began investing months ago. Mostly, I was just curious. And like so much of what others and what I do for this project, I care more about experimentation than guaranteed returns. Perhaps I'm not the greatest investor, but I am technophile. What? Technophile, I guess. And if this works, if any of this works, it could mean a reshaping of the internet, of commerce, of ownership, and even democracy. Wow. So I remain hopeful that the blockchain trilemma is either solvable or that Kevin Seknicki is correct and there is no blockchain trilemma. Until next time, thumbs up. Man, that was a great read. Gave us a nice little video to help us know how to earn passively. So I'm definitely going to like that. I appreciate that. If we have enough time to knock out our last article, then we'll just be going deeper into the Cosmos network tomorrow. That's so many ETH killers. It's hard to fit all this in 1 week if I had to continue this. So Pollen's PLN becomes the first Avalanche token to list on AscendEX. The Avalanche-based DeFi protocol is getting its first centralized exchange listing. That's pretty big. All right, so Pollen, a DeFi protocol based on Avalanche, is getting its governance token PLN listed on AscendEX. According to the press release shared with CryptoSlate, PLN is the first Avalanche chain token to list on a Singapore-based exchange. Decentralized portfolio management with Pollen. The Pollen ecosystem is starting the year on a high note after spending most of 2021 in heavy development. The ambitious DeFi protocol is getting PLN, its governance token, listed on AscendEX, a global cryptocurrency exchange based in Singapore. In a press release shared in CryptoSlate, the team behind Pollen said that this is the first time PLM was listed on a centralized exchange, as the token has so far only been available on Avalanche-based DEX, Trader Joe. Today also marks the first time an Avalanche chain token was listed on AscendEX. This is big news, right? We're going from decentralized to centralized exchanges, getting more eyes on it. So we are proud to be the first Avalanche token to list on AscendEX, said Philip Varian, the co-founder and project lead of Pollen. A whole new audience of potential Pollen users who wish to participate in DeFi and the emergent Avalanche ecosystem, but are more comfortable with the experience and tools from a centralized exchange, can now take their first steps into the Pollen DeFi asset management ecosystem. First step being buying some of the tokens, right? Pollen is a DeFi protocol designed to simplify portfolio management. It provides users with the ability to trade and hold dynamically managed portfolios without the need to manage allocations and assets themselves. While the protocol deployed on Avalanche in response to community demand, its development team said that the speed, reliability, and cost effectiveness also made Avalanche a clear choice for Pollen. The project's mainnet is scheduled to be released in the Q1 of 2022. Until then, users will be able to stake their PLN on AscendEX, where they'll be eligible to receive an attractive APR on their funds, right? They're letting us actually stake on a centralized exchange and earn from it. Great. Yeah, y'all, those that don't feel well, we're using decentralized exchanges, can't use decentralized where they know it's backed by a little something. No, the team has secured investment and support from leading VCs in the crypto industry, which includes Protocol Ventures, FOMOcraft Ventures, Red Building Capital, Adventures DAO, Rarestone Capital, and Alphabet. Trading a PLN/USDT pair on AscendEX will open on Tuesday, January 11th. So it is already live, y'all. Wallets will be open for deposits approximately 12 hours before trading starts. So, hey, I might need to go and check on that. A lot of times when these coins hit centralized exchanges, the value kind of boop, right? Because people they're able to buy it. Well, let's go ahead and end this with, wait, I'll play the commercial first. And then we're going to come back and do a little chart on Avalanche.
Huddle Games Magazine is getting ready to do an airdrop to every single magazine holder. There are only 74 issues left. NFT holders will also get access to the Huddle Games Magazine Discord. Over and out.
Thank you for that. Let's pull this one over real quick and let's check out Avalanche. Where are you, AVAX? Oh, that's Ave. Excuse me. It should have already been here. Now I gotta get my tabs right. Looking nice, looking nice. Let's get off that 15 and see something that matters. All right, let's cut off some lights so that we can see clearly. We can cut off the gator for a second and the camera below. Now, let's zoom out and really get us understanding with some Fibonacci's. I gotta use my fibs, y'all. Let me pull out these fibs. We'll go all the way back. Just want to make sure we're at the bottom. Boom, boom. Let me also get rid of these expired lines. All right. Now we're cooking with some grease. So, what are we seeing with Avalanche? We see what was once resistance, right, is now acting as support. So that's something to think about. Before y'all start thinking, man, is it worth me investing in it now? Well, let's see. It was down here. We had a nice little breakout. We done broke out 23. Took straight off to find some resistance. Had a nice little pullback to our 50-day. Now, full on retracement would be the 382. So y'all, I'm still looking for that. If I can give me a $63 AVAX, I'm buying it. But looking at this right now, bro, that support is strong. Again, this is once resistance. We see it here. Hard to break above that 50. Boom. Boom. Then when we finally break above it, what happened to that 50? It turned into support. And it's been holding as a good support line. Every time we come back, will the support break? Will it hold? Tune in more for more on Dragon Ball Z. But I'm looking at this as a decent entry. And after what we just read about AVAX being somewhat, in that person's opinion, the closest thing to an ETH Killer out, are we saying that it's not worth it to start investing at $87? What if we could see our all-time highs again at 146? Won't you be happy that you bought at $87? Right? What is the long-term goal from this? Do we think that this can break into all new highs? If this is actually an ETH Killer, shouldn't the price at some point in time get somewhere close to what Ethereum is doing? Maybe. I mean, maybe not this year. Maybe not right away. But could you see AVAX being worth $3,000 in your future? In the next 10 years, perhaps? If that's the case, then do you think AVAX is a bad purchase at $87? Now, again, we're not saying that we're bullish yet. We're actually still going through a downtrend, right? Let's grab the EMA so we can see just how that's working out for us. Yep, we are under the gator. We are under our EMAs. It is possible to see more downtrend before we see the uptrend, but with what we've seen in the past, this is a nice support line. So for me, I don't think I'm gonna feel bad about buying this support line. I'm gonna give y'all another example of a good support line that people are like, well, will it go down further? What if I lose my money if it doesn't hold? It was Bitcoin. I remember when Bitcoin had that hard line at what about 65, I believe. It was at $6,500, right? Not the 17. Oh, I gotta go to Binance. Let me go to Binance so we get real history on this thing. That is Binance. So yeah, this 2019 right here, right? So we was having a hard time breaking this 65. And I told everybody then, hey, that's a strong support line. But what happened? It went under that support. And oh man, I lost all my money. I ain't messing with it. Look what happened when it broke above. Boom. It broke above that 6.5 and it started. Let me just go ahead and draw it for y'all. And then it started using that 6.5 as support. Support. And then boom! So, if you think you should have bought this line, but then as it can go down lower, you're right. People that bought it at 65 actually seen it go all the way down to 33, right? They seen that thing damn near split in half. Some may have lost faith and got out of Bitcoin altogether. But those that said, hey, I'm going to buy a little bit more. Can't go down too much further. Well, those people are happy right now. So again, this isn't financial advice. I don't give financial advice. But I'm just saying, AVAX might be worth the investment. That's it. So we'll have more on Cosmos tomorrow. Maybe I have just as much information on that, and it was good I didn't try to cover them both at the same day. But we're definitely going to keep on picking up at Cosmos going into tomorrow. But this today was Avalanche. And another thing I didn't say enough about Avalanche is they are building games on Avalanche. A lot of popular games. Avalanche with cheap transaction fees. So I don't know about you, but I like what Avalanche is doing. It is definitely worth it to just get a small bag and to see how it turns out. Or a big bag if you really love the project. Do your due diligence, research it more, and I hope this was helpful.